Hi, good evening, everyone. This is a quick review on the Nippon 250 small cap NFO, which has come out in the market. It's a new theme because it's a passive fund on the small cap index, right? So small cap index is the index, Nifty small cap 250 is the index, which represents companies from market capitalization 251st rank to the 500th rank in the market, right? So you have Nifty 50, which are the top 50 companies. Then you have Nifty Next 50, which is 51st to 100 company. Then you have Nifty Mid Cap, which is 101st to 250th company. And then you have the small cap, which is 251st company to the 500th company. Till date in the country, there's only one fund, which is a Motilal fund, which is a small cap index based fund. Otherwise, there was never a small cap index based fund. Small cap has always been considered as a category where active fund managers can generate alpha, they can deliver great returns, but over a period of time, the alpha generation has not been very significant. And what has also happened in the small cap category for last 3 years, if you see, the divergence of return is extremely high. The best performing scheme will be like positive 10, 15 odd percent, and the worst performing schemes will be all negative returns, right? So for a layman investor, it becomes extremely tough to figure out what scheme will do well. And typically these schemes rotate. Never have been a case when a single scheme has consistently done well for 5 years, 3 years put together. So schemes keep rotating, sectors keep rotating. It becomes very tough to select a fund manager who will outperform the benchmark all the time. So globally, the best strategy has been to invest in passive index funds. Why? Because they are liquid, they are based, they will mirror the index. Index in itself will keep incorporating the best 250 companies, which has the potential to become the future mid caps, and those future mid caps, which have the potential to become the large caps. So index automatically rebalances. It's the most low cost strategy. For this scheme, the expense ratio in direct plan is 30 bips, and under the regular plan it's only 1%, right? So the expenses are very low. It will track the index. The tracking error is low. Small cap index today represents almost like 6.7 odd percent weightage of the overall market cap. So for people who are investing with a very long term vision, with a view of like 10, 15 years, who want some small cap exposure, this is the fund to have in your portfolio. You should have a passively managed index fund strategy in the small cap segment also. Talking about the AMC, Nippon is the fifth largest AMC in the country. They already have an actively managed small cap fund, which is like 9,000 crores in assets. It's a fairly long dated fund with a good track record. It's been delivering great returns, almost like 15% CAGR returns since inception. So the track record on the active side is also good. The AMC is very well established. It's a large name. It was previously Reliance. It's now Nippon, with the Japanese company taking over the Indian house. So everything is well in order for investors who want this kind of an allocation, who want to take dips in small cap segment. This is a very good way of approaching the market. So that's a quick take on the Nippon small cap 250 index fund. It's an NFO in the market. You can feel free to subscribe to it if you want some small cap exposure. That's from my end. This is Mohit Gang from MoneyFront. For all those who want to get involved with our advisory services, you can reach out to us on support@moneyfront.in. And thank you so much.